It's been dubbed the Amazon of Africa. It's Africa's largest e-commerce operator, surpassing Amazon and China's Alibaba, and it's the first African tech startup to go public on the New York Stock Exchange. Investors had high hopes for Jumia when it went public on April 12, 2019. Stocks skyrocketed at first, but then quickly tumbled on the heels of criticism.
This is the fraud being played on the U.S. marketplace.
People started questioning Jumia's Africanness too, due to the company's largely European leadership and shareholders.
We are a completely African company.
Now, Jumia is adjusting to its international status and figuring out what that status means for the African continent.
There is an Africa ecosystem that has developed off the back of the creation of this thing.
Jumia was founded in 2012 by Sasha Poyanek and Jeremy Hadara, who were both former employees of the American worldwide management consulting firm McKinsey & Company.
We saw so many challenges in terms of infrastructure, traffic, availability of product, prices, and we saw that internet was the way to connect the customers with the different sellers and vendors and small SMEs on the continent and help them connect and do more business together.
Jumia offers customers the ability to buy products online like phones and shoes, as well as groceries, flights, food delivery, and offers bill paying and cellular data recharging. The company sought to build an online shopping experience among other digital products that could work well with Africa's sometimes ineffective infrastructure.
If I said, you know what, 42nd Street and 3rd Avenue, I'll be on the corner waiting for you. You know exactly where we'll meet. You can't do that in Africa. The streets aren't as signposted. You don't, the geography, especially when you think of outside the major cities.
In other cases, Jumia cites a lack of online shopping experience from users.
When we ask the people who have never used online shopping yet, the reason why, the number one reason which comes out is, I don't know how to shop online.
That's why it was so important to make sure Jumia addressed its specific user base and wasn't just a cut and paste copy of Amazon or Alibaba. Alibaba serviced 4.2 million African customers through its AliExpress service since it entered the continent. Jumia serviced 4.3 million users and 81,000 active sellers in the 14 countries it services since it started.
Let's take something that works in the West, throw it into Africa and see if it works. If it works, we'll throw money at it. If it doesn't work, we'll kill it very quickly. That strategy for me was fundamentally flawed anyway, because I believe, anything emanating from an ecosystem should be solving a problem that is consistent with.
Amazon is technically available in 11 countries on the African continent, but neither Amazon nor Alibaba have the benefit of starting and completely focusing on African countries. Jumia, for example, offers unique features like pay on delivery, and that piqued the interest of U.S. investors.
Everybody's been looking for an African unicorn. We've all been looking, I've been in this in the angel business for about a decade now. And all of us are looking for that, something that validates the African experience.
When Jumia went public on the New York Stock Exchange, it had a lot of promise. Its stock prices rose 75.6% on its first day and held a market cap of $3.9 billion. And even though it had about $1 billion in losses at the time, the prospective shareholders were forgiving. The U.S. was excited to have the opportunity to buy into the first African tech startup on the New York Stock Exchange.
All of a sudden, here's somebody coming and saying, guess what, guys, we've cracked Africa. We're making money, gangbusters. This is it. Everybody got excited because we all want Africa to win. Everybody wants Africa at the table.
But the attention Jumia was getting in the U.S. exposed some of its problems.
We have no doubt at Citron that this report that we've issued and the supporting documentation will soon be used as evidence by the SEC in a case against Jumia.
In May of 2019, Jumia came under fire from Citron Research, a stock commentary website run by short seller Andrew Left, for what Citron claimed was securities fraud and discrepancies in its reported key financial metrics.
What we learned about Jumia is best summed up in one email that was sent to us from a former executive. And what does he state to us? That Jumia is clearly lying about every reported number.
The report released by Citron brought Jumia's stock down over 40% in 2 days. And Citron isn't the only entity to raise its eyebrows at Jumia.
To be honest with you, there are quite a number, and I've met a few myself, of disgruntled Jumia employees floating around there. You look at some of the reporting, there's some credibility, but I think it's overhyped. That's just a personal view, but there is no smoke without fire. Jumia is culpable on some of those things. That is my personal opinion.
Jumia Nigeria's CEO, Juliet Anama, responded on CNBC Africa to the accusations.
This is, taking selected, biased, and in some cases unverified facts with a clear, possibly the intent of damaging a brand and profiting from it.
Citigroup, one of Jumia's IPO leaders, released a report debunking most of Citron's allegations, but noting that, quote, Jumia could do more to provide disclosure on some aspects of its operations as a matter of transparency and best practice, end quote. But it wasn't just this scathing report that hurt Jumia. Soon after it went public, the hashtag Jumia is not African gained popularity, commenting on the company's largely European involvement.
Jumia is a German company, okay? So it's paying its taxes in Germany, where the founders and most of the shareholding is based, except for MTN. Its CEOs, which is irrelevant to the argument, are actually of French origin. Its development team, it's after all a tech company, its development team is actually in Portugal, which is in Europe. Its headquarters is in Dubai.
But Jumia CEO Sasha Poyanek says Jumia is a
completely African company. We operate exclusively in Africa. We have more than 5,000 employees in Africa. And as you point out,
but those are the warehouses, not the engineers.
The reality is, in Africa, there's not enough development and developers, for example, and we know that, and we need to collectively, the startups and the VCs and everyone, address that, because everything should be in Africa. This is what we want, and it should be like this one day. We need to work on that. It's not going to happen overnight, but this is something we have to do, for sure.
But Jumia's Africanness is not as critical to some. Despite the company's offshore management, Jumia has kickstarted a wave of new startups created by former Jumia employees.
It has grown Africans to the point where we are now creating companies because of that experience. And that can only be good. So we now have our Jumia mafia, just like you've got the PayPal mafia. And that's what I look at, is what has it created?
Jumia certainly made a big splash on the New York Stock Exchange. But the bigger impact was on the African continent.
I think the focus and the emphasis has been too much on Jumia as an IPO and all of that. There is an Africa ecosystem that has developed off the back of the creation of this thing.